Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very nice day in the markets today and that you spent some very nice time over the course of the long weekend with your friends, your family for the Christmas and holiday period break, and that you're ready for another nice week in the markets. Now, in terms of today's action, the S&P, the Qs, and most of your markets pulling back a little bit, and we were kind of hinting at this yesterday in the top 5 options video that we wouldn't be surprised after about 4 or 5 days of upside in a row if we kind of just curl a little bit lower, establish some more support before maybe embarking into the Santa Claus period rally, which extends through the first 2 trading days of the month of January, which would put us at January 5th. Next Monday, so there's still some time left on this trade overall. However, very low volume day for the indexes, broadly speaking. The S&P volume is very low, the QQQ volume is very low as well, and there wasn't really much news in terms of any stock-specific things today. But what was making headlines across the world were the metals. Taking a look at the metals moves right now, gold, after reaching a new all-time high in the futures market open yesterday evening, pulling back super hard all throughout the day, 4.5%. But the one that everybody is talking about, of course, has to be the moves in silver overall. So if you take a look at your silver futures right here, getting absolutely rinsed today, 9%, but they did hit a new all-time high in the Asian session last night, almost $84 an ounce. Silver's been on an incredible rally so far, and now you might just have some form of a short-term climax top, and even on the other metals that nobody ever talks about except for when metals become front and center in the news headlines. It becomes a very crowded trade. Look at palladium, down 15% today, and even the other one right here, platinum as well. Platinum down 14.5%. Now, a lot of these metals have had record years so far, which have led people to believe that it's a metals super cycle and the commodity super cycle. And a lot of retail investors have taken interest into these names, which has brought out memes, right? Such as this one right here, that nobody wants silver at 35, but everybody wants silver at 81. And the retail interest in terms of Google Trends definitely does show that as well. The interest over time has just been building and building and building through 2025 and peaking recently, making it a very crowded, however, very interesting trade as well. So in today's video, guys, we got a lot of things to talk about, and yeah, we'll go over some of the metals charts in this video, but for the most part, we'll be spending some time on some technical analysis first, right? So first off, we'll do a full technical analysis rundown of where we stand on the SPY, the Qs, and some of our minor sectors, check on the rotation, check on the market breadth as we kind of wrap up 2025. Thereafter, we will do the same thing across our big tech names, derive which of these tech names into 2026 could be very nice opportunities for some swing trades or for some long-term portfolio opportunities. And then here at the very end of the video, guys, we'll take a look at the biggest gainers and losers of the day, of which, as usual, there were many, even in spite of the low volume environment that we find ourselves into right now. Taking a look here, many names, big red today, and then some names on the upside. Not crazy moves to the upside, but some notable moves all the same. So we'll try and pick apart some names on that list and derive which of these names could be interesting opportunities into 2026 as well. And that'll be it for today's video, guys. Going to be a short trading week, a low volume trading week. So it's a perfect week to kind of build upon some ideas and some themes that we want to carry into 2026. That being said, let's jump right into it, shall we? The S&P down about 0.36, the Qs down about 0.48, which gives you a heat map that looked a little bit like this. Now, not too much movement today. Financials struggling a little bit. NVIDIA and semiconductors coming down in spite of the fact that there's really no news on these names today. Big tech, not the greatest day and not the greatest end of year push for sure. And the rest of the market, though, not too bad, right? Healthcare, bit of a slide today, but the bottom half of the market kind of there to put in some gains, right? Defensives, energy, industrials were participating slightly today, but as you can see, very low volume day and no significant moves across the board. Taking a look at your one-day relative, you'll see that even better to where only energy, real estate, and defensives kind of made it out with some small gains. To the downside, basic materials, a lot of the, mining companies and stuff like that, right? They're your contributors to your downside in basic materials, followed there by cyclicals and financials and technology, which were also to the downside today. On the 1 week relative, well, you guys probably can understand after about a nice 4 or 5 days of rally, one little day of pullback should not erase all the nice weekly gains that we've had so far. Only 2 sectors trailing the pack, still defensives and cyclicals kind of being left behind. Your best performer, energy, and I do think energy is going to be a core theme into 2026 as we embark into phase 2 of the AI trade, which largely is now going to be the application and efficiency layer of AI. Think certain key software players, and also think some of the energy requirements for all the data centers that have been built or committed to being built through the end of the 2025 period. So interesting moves there as well. Fear and greed stays put at neutral right now. We were in greedy territory last week, but coming right back to neutral as the market has kind of lost a little bit of momentum over the course of the day. Inflation still stays put at about 2.16%, which is really good. Not a concern for us leading into 2026, and the Fed has commented as such as well. Their PC inflation projections for next year stand at about 2.4%. And that is not too bad at all, guys. Definitely shows that the trend for inflation is down, 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 down. And we've now been moving a little bit lower through the month of December, which is really good as well. So a couple key things to look forward to in 2026, guys, as we kind of compare and contrast our short-term bearish narratives, which have been at play now for a better part of the last month and a half, 2 months, the AI bubble and some concerns surrounding the debt obligations of CoreWeave, of Oracle, of other companies in that nature, right? The fact that the technicals were stretched, the jobs creation softening, the K-shaped economy with the status of the consumer, which should be coming back around into 2026, provided we get the no landing or soft landing scenario, which was portrayed by the Fed's summary of economic projections just a few weeks ago. And obviously, guys, these short-term bearish catalysts are kind of counterbalanced by the longer-term bullish tailwinds, such as expansion of GDP. We got a very nice GDP print for Q3 last week. That should be maintained into 2026 as AI continues to contribute heavily to this GDP number. The Fed coming out and having a 2.3% gain in GDP for 2026. That should be good. We got rate cuts, of course, more rate cuts, about 2 to 3 rate cuts in 2026 if all goes to plan, and the end of quantitative tightening. We got a low unemployment situation. Now, I agree the jobs market is not the strongest as it has been in the most recent few years, but it's not falling off a cliff. Unemployment is not skyrocketing to the upside. You do have lowish inflation, which we just showed as well. You have very strong earnings and a tremendous amount of tax cuts. And the AI megatrend continues, although may broaden out to different sectors that we've been used to throughout the course of 2025. So all of these are represented in a few charts that I'll show you guys before we get into the technicals real quick. So number one, we got to talk about the Santa Claus rally, which is your last 5 trading days. I mean, calendar days, it's the last 5 calendar days of the year, first 5 calendar days this year of the new year. In terms of trading days, that's the last 5 days of trading of December and the first 2 trading days of the month of January, which puts us through January the 5th. We missed in the past 2 years, 2023 and 2024 were negative, and usually you do not miss 3 years in a row, and your average performance is still about 1.27%. So since the start of the Santa Claus rally, which was the day before Christmas, the 24th, we are still net up, but today was a bit of a struggle, of course. We'll see what the market has in store for us over the course of the rest of the year, meaning the next few days. Here are your forecasts, guys. Where do all the major banks think we're going into 2026? Because of all these strong bullish tailwinds. As we've been saying, there are some bearish headwinds at play right now, short-term bearish narratives, but it's very difficult to be bearish on the markets into 2026, right? Because you have a lot of bullish tailwinds. Now, we may not see another 20% year in 2026, but it's very tough to come to the conclusion that the year would be overall negative. There's just so many bullish tailwinds that we have to pay attention to, right? Number one is going to be this one right here. All your year-end price targets from most of the major banks, your average is sitting about 75.55, which is about, let's call it 8 to 9% higher is your average, with many firms well above that and some people below that. But you can notice that most of everybody is indeed above where we currently stand right now. And for good reason, right? Earnings expected to remain very strong. Take a look at your estimates for 2025 and 2026. The S&P 500 annual bottom-up EPS and actual estimates. Earnings are supposed to grow very nicely, double-digit earnings growth into 2026 as well. And you can see here that the profit margin trends continue to trend higher as well into 2026. Coming in at 13.9%, which is our best profit margins that we've had over the course of the past decade. Few more for your guys here. Increasingly, profits are driving returns in this bull market. This is some research by S&P Global and JP Morgan. And you can see right here that year to date, 2025, right? And it makes perfect sense. More of the market's returns have been driven by increases in earnings as opposed to multiple expansion. 2023 was the year of multiple expansion because we're coming off of the asset bear market of 2022. So although earnings were slowly curling back over from the declines in 2022 into 2023, well, a lot of the momentum came back into the markets and you had a lot of multiple expansion. That was then compounded upon during 2024, where you had a mix of very strong earnings, but still a lot of multiple expansion. You can think of names like Palantir, names like Robinhood, a lot of the Mag 7 as well came into multiple expansion territory. And 2025, even though we're ending 2025 on a bit of a sour note for some tech names out there, it's just good to remember that earnings have been growing, right? Which is what you want to see coming into 2026. Even though some stocks have come down in the later part of the year, if you know that earnings are going to be bullish into 2026, you can still be bullish positioned into 2026 in a lot of these key players, namely a lot of the Mag 7 names. And one last one for you guys, don't forget that big old tax boost that's coming very early 2026, your fiscal boost with the big beautiful bill policies coming into play. No tax on tips, no tax on overtime, and obviously no tax on Social Security are going to be big ones for the consumers. But you also have a tremendous amount of deregulation, investment incentives, the basically reiteration of the business corporate tax rates from 2017 are extended now through 2029 as well, which is very good for a lot of these corporations, right? And so many key little aspects of fiscal stimulus policy coming into 2026. So you got the rate cuts coming, you got quantitative tightening, which is done, you got nice fiscal policies right here, you got beautiful earnings growth. So all in all, guys, right, it's very tough to remain bearish into 2026. Now, are we going to see the record gains on some names that we've seen throughout 2025? Like, meaning, are we going to see these crazy year-to-date performances on names like, you know, Broadcom up 50% next year again, or Palantir up 150% next year, or Micron up another 250% next year as well? Maybe not, but what you could see is what we've been talking about on the channel now for the past few weeks is a broadening out of the market and several other key sectors finally coming in to participate, whereas a lot of them have been left kind of behind in the past 2 years. Speaking specifically about some of the energy plays, some of the industrial plays, some defensive names, right? Healthcare, continued expansion in that sector, financials poised to have a very nice year in 2026 as well. So I do still think that tech and big tech specifically will have very good years, but maybe we won't need to be as concentrated into these names to find some of the best gains in the market into 2026. So that's kind of your outlook into 2026. Hopefully you guys enjoyed that. For now, though, let's talk about what we have on the table for the S&P and our technicals moving into the rest of this week and possibly into next week as well. So we know that it's going to be a very low volatile environment and low volume environment as well. So normal price action can possibly prevail. The bulls put in a very nice engulfing move right here. They're just looking to recapture the uptrend. As you might remember, we lost it right there. You're trying to get it back with a nice engulfing move, trying to set up for the higher lows for possible expansion for the rest of the Santa Claus rally period, which I'll remind you extends into next Monday. So at this point, guys, anything above 671, your line in the sand, remains an attempt for a recent daily higher low and possible further expansion into 2026 with nice support down here, 682 down about 679. Not the strongest level, but it is the closest level that we have. So just pay attention. There's really nothing that stands in our way in terms of macro this week. You got the FOMC minutes on Tuesday tomorrow, but that's just going to be a reiteration of what we already know. Other than that, there's really nothing until next week where we start getting a few details for the month of December, such as your ADP employment change, private employment, right, on Wednesday, and that follows up with the JOLTS jobs openings that very same morning, and then the non-farm payrolls on next Friday. So if you have one thing to pay attention to in 2026, it's not going to be inflation anymore. It's going to be all about jobs, 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 and also companies' ability to deliver on those earnings gains promises, right? So keep those two things in mind. In terms of next week, though, other than these things, what we have to look forward to is some tech headlines coming from good old CES. So you're finally getting the new CES for 2026. You'll have many people presenting, such as the CEOs of very famous companies, largely associated with the AI infrastructure build out, such as the president and CEO of Siemens, Caterpillar. You got Lisa Su coming in there. You got the CEO of Lenovo and several other key figureheads in the whole tech landscape. CES is going to be from January 5th to January 9th. So basically most of all next week. And then of course, you got Jensen, good old Jensen Huang, also presenting next week at CES. So finally, we may get some tech headlines because it seems as though in the most recent few weeks, there's been a lack of bullish tech headlines as well. So maybe that's something to look forward to into next week's worth of trade. But this week, a very flat week overall. So this one will be one to build some ideas for 2026 when the real volume comes into play early next week. And then, of course, as we embark into Q4 earnings, which will be starting at the midpoint of the month of January. As you can see right here, earnings blackout for the next foreseeable future. Next week, there's not too many earnings, but the week after that, if there weren't all these gray zones and snowflakes in the way, you would see that there are all the major bank earnings coming out with their earnings the week of January 12th through January 16th. So just some things to look forward to. So right now, you should be taking advantage of this kind of time off, quote unquote, to prepare your favorite ideas for 2026. Obviously, we've talked about many of them on the channel, but I will be making a mission of further discussing these throughout the next few days of trade, and maybe even this upcoming Saturday, posting a kind of like top 10 growth, top 10 maybe value or consumer rotation plays that I'm looking for into 2026, just to give you guys an idea of where I'm going. So that's it for the SPY. Moving on to the QQQs right now, same concept, right? The Qs basically lost the daily uptrend. You got a nice retracement size right here. Just looking for a higher low, guys. No crazy action today, right? Your line in the sand is still at 600, so looking for a higher low above that. And support stays planted 613 out of 605. No real red flags, and the reason being, I mean, you just still got the weekly uptrends, right? We're still just trying to go for some tightening up here, maybe before the weekly uptrend expansion. I don't really see any negative catalysts for the market much before the midpoint of next week. So you could just kind of drift a little bit higher into that expansion. But of course, we'll take these things one day at a time. On to financials right now. Financials with a healthy pullback, in my opinion. Daily uptrend, looking for a daily higher low. Line in the sand, higher low, 54.35. Anything above that, looking for a new higher low for possible further expansion. Some of the banks pulling back, such as JP Morgan. JP Morgan, probably one of my top favorite bets into 2026 for financials. But even names such as Visa, right? Visa, MasterCard in 2026. I mean, just look at the monthlies, right? You're nicely curling up on the monthlies on Visa and MasterCard. And even some companies that have gotten no love over the course of this entire year, almost a year and a half, SPGI, companies like Moody's Corporation as well. I know these are very boring corporations. Even companies like Berkshire, some of your insurance players, could be interesting picks into 2026 with the broadening out of the market. So keep that in mind. Moving on to healthcare right now. Healthcare just doing a whole lot of nothing. I mean, they're trying to continue this daily uptrend, but really soft price action. If we just get stuck in a range for the next week and a half before the real volatility and volume come into play, I wouldn't be surprised. The bulls are still very much in control of this chart right here. Weekly time frame is in their control as well. And just like the S&P, right? The S&P and the Qs, they showed some kind of tightening up patterns here before going for the break. The Qs, you can see it even better, tightening up right there. Bull flag, XLV healthcare, you might just see the same thing if the markets do consolidate a little bit. So healthcare could be a top theme into 2026 as well. There's several key names that are just still a little bit lower than others, right? Some of the insurance plays could still be very cloudy into 2026, but maybe some of the pharmaceutical names, etc. We'll look into those, but some of my favorite ones, as you guys know, medical devices is kind of where I like to play. And this one is going to be a top pick for me. And even something else like a TMDX, Transmedics Groups, for a bit of a smaller cap play. Those are the two plays that I'm kind of carrying into 2026 into healthcare. I'm not really playing any of the healthcare insurance plays because of the risks into January with another government shutdown surrounding the policies about the Affordable Care Act subsidies and things of that nature, right? So not a play for me, those healthcare insurance providers just yet. SMH right now, semiconductors suffering a little bit today. I mean, not too much movement, but you're just looking for a higher low, right? So after getting stopped out at equal highs for your all-time highs, beautiful move up, higher low. And if they once again go into something like the QQQs is in right now, just a tightening up of the pattern with low volume, you wouldn't be surprised with that, but not looking too bad, right? This indeed would be a bear flag if you tighten up. I mean, they're looking for the expansion straight up, but if you just want to tighten up a little bit more, it's still a bull flag, right? Higher lows, equal highs. You're just literally creating a perfect coil up for some possible bursts into 2026 right here for semiconductor names. There's still several very interesting semiconductor names on the table for 2026. AMD is obviously one of them, which we talk about every video. NVIDIA is another one of them, looking very good. Micron, even though it's extended right now, we covered them after earnings. We were saying even though after earnings, Micron was extremely elevated, their valuation was super cheap. So this one is still a hold for me into 2026 if we're holding any Micron. And even some other names such as, Marvell, which has been down a little bit recently. Even some names like Broadcom, which sold off after earnings, should be able to perform still quite well into 2026. So just keep that in mind. Moving on to the Russell right now. The Russell down about 0.61. Very flat action on the Russell, not much to discuss right here either. So, I mean, the bulls are trying to save these lows, higher lows above 247 roughly. And even if you lose those into a downtrend, I mean, you got resistance, support right here. So you'd like to see them hold it. But even if they don't, is it that big of a deal? Not really, guys. I mean, you're just looking for a weekly higher low at the end of the day, right? Anything above 229, looking for that higher low, possibly for the expansion into 2026. And at the same time, just looking a bit awkward on the monthly consolidation cycle for the Russell right now. So I'm not playing the Russell specifically, but I am playing several other smaller cap names that we've hinted at on the channel for the past 2-3 weeks overall, as we kind of build positions into the companies in the high kind of like $1 to $10 billion range, which could have very nice years into 2026. Names like robotics, some smaller energy players, right? Names like some software and automation plays as well. Those could be front and center into 2026, but we'll do a big recap of those more towards the end of the week. And just doing a little bit of a recap of other sectors right here. XLP would be definitely one to watch in 2026. Consumer staples. There's many staples that have just kind of fallen off recently, such as Costco. Costco probably one of my favorite bets into the next 3 to 5 years type of stuff, right? So consolidation on Costco here, mid 800s down to 800 for the full consolidation. Costco does this every now and then. This is the quarterly chart from Costco. You'll see how they're going to close this quarter in a couple days right now. And they always come down and back test this 12 EMA on the quarterly chart. So if you're confused as to why Costco is dropping, it's not because the business model is bad. Definitely not. We covered their earnings December 11th. It's just because the valuation is very extended. So Costco goes on these legendary runs and then just consolidates sideways with a bit of a bearish leaning bias for an extended period of time as they kind of grow their earnings and kind of drop the valuation that way, right? Slight bearish downside while improving their earnings sequentially. It will be able to bring the valuation down, but Costco may just be stuck here for a while. And plays like Walmart, probably very, positioned well into 2026 as well. But you're going to need a bit of a pullback here on Walmart because buying it all the way up here is definitely not in my favorite trade wheelhouse, right? So a couple other XLP players out there, which could be notable to us. But even if you just want to play the ETF, I don't think it's that bad of a deal, guys. Prior resistance, current support for the last year and a half, roughly. This is a monthly chart, and you're just probably looking for some progression of some expansion, the broadening out of the bull market into 2026, in other words. Moving on to consumer retail. Consumer retail will be part of the K-shaped recovery trade, aka the no landing or soft landing projections from the Fed. So if consumer retail is something that you are keen to playing, there are several consumer retail plays that are very attractive right now. And we don't have to really look into some of the food companies that have been destroyed recently, like Chipotle or like Kava, or some of the apparel brands which have been destroyed like Nike or Lululemon or things of that nature, right? I mean, you can play those, but you can also play proxy plays like Affirm, which is buy now, pay later. It gives a broad sense of the general consumer penchant for spending, right? So this one could be interesting, but also something very broad like an Amazon, right? You don't need to look too much further than that. Their e-commerce business should perform very well into 2026. So instead of picking brands here and there, you can go with broader plays if you so choose. So there's many ways to play consumer retail, or if you just want to play this XRT ETF, no problem at all. It seems as though they want to go for the monthly uptrend into 2026 after doing nothing for a better part of the last 2 years. Utilities is going to be a central focus point for, I think, a lot of people in 2026. There's a few bullish catalysts for utilities overall. Obviously, we know the energy requirements for the data center trade, yes, but a lot of these utilities companies also present very attractive dividend yields, which brings us into the risk-free trade-off, right? Now, obviously, when you compare utilities dividends, you have to compare it with the risk-free rates, such as the longer-term bonds. And although the longer-term yields have been quite sticky up here in the mid to 4% range, throughout 2026, these most likely will be coming down significantly. And as a result, you may just have a bit of a rotation back into a lot of the dividend-paying companies. There hasn't been much of a premise to rotate back into dividend-paying companies because a lot of these dividend payers were utilities with slow growth or consumer staples, which just haven't been very good recently in the past year and a half because of the K-shaped economy, right? But all that may change when you decrease the risk-free rate. People that are looking for stable yielding returns may pivot back into some of these plays, and utilities will be front and center. So it's a two-part trade. Number one, the risk-free trade pivot back into dividends, and number two, of course, the ever so large power requirements from a lot of these data center players. So we can look at plays like Vistra, which I've been bringing up a lot. You can look at plays like Duke Energy. You can look at plays like Next Era Energies as well. All these utilities players with a data center focus could be interesting into next year overall. Lastly, we'll talk about real estate right now. So real estate, I mean, not too bad, but you will need to see the longer term yields come down to kind of stimulate the housing market overall. But there's many ways to play this real estate trade as well. You can look at some REITs such as Vici, which has just been down to multi-year lows, paying a very attractive over 5% dividend yield right now. So you can either choose to play the REITs, you can choose to play the home builders, which could be a thematic play into late 2026, 2027 as we see some further expansion, or you can play some of the mortgage companies directly overall, right? Such as Rocket Mortgage, which has been one of our favorite plays leading into next year as well. I mean, there's many other companies like Fannie Mae or, you know, other players of that nature, but Rocket Mortgage is just my favorite overall. So many different aspects of this real estate trade. It just depends which one you guys are more comfortable playing. That being said, that's everything in energy. Focus on energy into next year, guys, because energy has just been flat. A lot of this energy trade is associated with the prices of oil, and we know what oil has done over the course of this year. It's just been coming down, 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 which is great for inflation, but a lot of these oil companies have been able to protect a lot of their profits and free cash flows, and a lot of them haven't really done anything in the past 3 years at this point, right? They are very cyclical companies, but a lot of these companies have very attractive dividend yields, 4.5% for CVX. You can look at companies like Enbridge, which has a direct exposure to the natural gas pipelines, a lot of which will be used to power the data centers directly or indirectly as well. So, and this one as well pays a 6% dividend yield. So energy, the entire theme of energy, everything from LNG to solar as well, could be very interesting coming into 2026. So pay special attention to the energy trade. I think it'll be one that will be talked about a lot coming into next year. And that's your overall market recap. Hopefully you guys enjoyed that. Now jumping into crypto, and there's not too much to talk about here, just more manipulation on Bitcoin and Ethereum overnight. Big boost on the Sunday night session, and then huge declines, just basically erasing everything that was done. And they've been doing this so many times over the past few weeks. It's doing nothing, right? So until it does something, there's no need to talk about it. Just understand that when you coil up super tight like this, eventually it's going to make a big move. Whether it makes it to the upside or the downside, you don't know. But the bulls have not done a very good job of getting a nice bounce going on the weekly time frame. It does look like a bit of a bear flag, but I don't think crypto has it in the cards to drop all the way there unless you get a pretty significant sell-off on your other assets into early 2026, like the S&P, maybe if some of the metals carry a bit further, then maybe you can see some further declines on Bitcoin. But as of right now, guys, no swing trades for me. You guys know the drill on Bitcoin. Bitcoin is just a long-term accumulation trade for me right now, and even Ethereum as well, right? If we're interested in Ethereum, you're interested in the Ethereum thesis, the building out of the back end for the banks, et cetera, et cetera, et cetera, real world assets, well, you're going to have to be patient and wait because Ethereum has been doing absolutely nothing. I mean, no need to talk about the short-term timeframes. They're just flat and doing a whole bunch of nothing. The weekly is still in a downtrend. The bulls have not been able to get much momentum off of this weekly bounce, and it's just in monthly consolidation right now. So very slow. This one is a long-term accumulation trade. There's no momentum here anymore. People aren't really talking about crypto. Everybody's focused on metals and other aspects of the market right now. And crypto is just basically a representation of the risk on trade. And we know that many aspects of the risk on trade just have not been that great in the past 2 months of trading, right? Since late October into early November. Not only these, but a lot of your favorite players, right? Or previous favorite players, like a lot of the quantum names, which are pure risk on, a lot of the critical minerals plays, which had their own time in the sun, right? Such as MP Materials, such as the quadruple U's, UUU, such as USAR. That critical minerals narrative is now kind of come and gone. And also some of the data center names, which are really, really hot leading into October, such as NBIS, IRN, the CoreWeaves of the world, all declining with Oracle's decline as well. So a lot of these themes, right? A lot of the hot risk on retail fan favorite names and even crypto to a certain extent have just kind of evaporated. And the money's been rotating, the big money's been rotating into the rest of the market, as we've been talking about. But also, I mean, the metals, after the metals took a little bit of a breather there into early November, gold's been expanding nicely, and silver has kind of caught its next leg of rally as well since that October period of consolidation. And this has now become kind of the newest popular trade overall for a lot of retail people, right? We know that retail enjoys shifting across the narratives right now. So let's talk about metals right now, because I kind of jumped over them, but we'll talk about them right now, right? It's very tough to predict where these are going to go in the short term. But one thing's for sure, guys, right? Usually when you see a further gap up open and a very crowded trade, and it starts to spawn memes like this, right? Very high search volume trends, very big memes like this, where this happens everywhere, guys. It happens in crypto. It happens on all the names we just talked about, right? It happens on the quantum computing names. It happens on the critical minerals names, right? When they're hot, everybody starts talking about them. Everybody positions, and you guys know the rest, right? The people who bought in early are selling to the people who buy in late. The people who buy in late still have the greatest conviction that they'll make as much money as the people who bought MP here. They think that if they buy here, they'll make the same amount of money. As we know, they're usually always wrong. The nuclear plays like SMR, like Oklo, right? Like Oklo, or the super overcrowded names sometimes like Robinhood. After Robinhood goes on ridiculous rallies, everybody starts buying up here. Then they're disappointed that they also can't get the 2-3Xs. So you guys have seen this all over the place. The NBISs of the world, the IRNs, the CIFRs, the Wolves, right? We know all of them, guys, all too well, right? The APLDs of the world, they're just all too common. So you see the exact same thing happen regardless of the asset. Now, of course, you know, we can talk about the reasons behind it, and we've covered these on the channel many times. The reason behind gold earlier this year was, of course, central banker accumulation because of distrust in the US dollar and possible distrust in the federal balance sheet in terms of the deficits that they're running, which led to the whole narrative of the death of US exceptionalism, et cetera, et cetera, et cetera. So central banks, especially the Chinese, were hoarding gold. Russia had their part to play in that as well. And then obviously you had heavy amounts of retail interest, and you also had a lot of the big stablecoin issuers buying a lot of gold because eventually they want to tokenize these assets as well. So you had like a perfect storm of everything coming into gold this year. And then thereafter that carried into silver as well and led to not only one, but two beautiful legs of expansion. And then over the course of the weekend, I have not seen, I mean, we were seeing a lot of people talk about silver back here, but not that many people. People in the know, people that had been buying earlier this year, right? Those people were talking about it. But where you got the most amount of retail interest has been in the last 2 weeks of time. The month of December for silver has been absolutely ridiculous. Look at this monthly candle, right? Big local blow off top, in my opinion. We've been talking about this, right? RSI is really juiced right now at about 90 on the monthly. The weekly RSI also got above 90, and that doesn't really happen on these metals plays. The daily RSI got above 90 as well, and it came to the point where everybody into the weekend, especially on social media, everybody was just super bullish on the metals, telling everybody else to buy, that it was just getting started. Obviously not. If you were buying silver at any point last year or this year, you have made the 2x, 2.5x, right? But then those people start convincing other people that buying up here is a great proposition, and then you end up with, you know, a big blow off top right there. Now, of course, many people say that I'm not talking about the true thing, so I'll talk about them right now. Of course, you had the Chinese export restrictions on silver. That piece of news came out over the course of the weekend, which led to the big gap up open on futures yesterday. You had a fake piece of news circulating that some mysterious big bank across the globe had somehow mispositioned themselves into some short futures trades and had to unwind them rapidly because of a margin call, and that we would be told which one of the big banks it was today. So far, it didn't happen overall. All things considered, you had other people posting very bullish theses on silver overall, being it's a big contributor to some of the connectivity that you need in some of the data center plays and stuff like that, that it's being used, that as well as copper, as well as some other metals like palladium for the expansion of, you know, robo-taxis and things like that. Like, trust me, guys, I know all the fundamental reasons, right? But you also have to use psychology, right? Just normal market psychology. When you get the blow-off tops with big volume, consecutive rallies like this, lure everybody in, the big old trap that they always set: volume climax, social media climax, social trend climax as well. And then you get the big old sell-off, and everybody asks themselves, what happened? Was that the top? No, wait, now is actually the time to buy before we once again put in another 1,000,000% rally on some of these metals that usually move a couple percent per year, right? Everybody's expecting these ones to move like meme stocks at this point. So, you know, you see it as well on some of these platinum names. I'm not saying that this is the absolute top, guys. I'm just saying that you got to kind of see it coming when social interest gets that high, and when you have such a crazy 4-week run, right? It reminds me eerily of the last 4-week run in some of these data center names like NBS and IRN, where nobody was talking about them previously except for a few people. And then everybody starts talking about them and everybody becomes the expert on them. kind of like overnight, that's exactly what you saw over the past week, right? So, like right now, everybody is a silver expert, right? Of course, right now, everybody is a diehard silver expert, right? Like everybody wants to buy it now. Nobody wanted to buy it in the last 5 years that it was down here with the same thesis that it was somewhat undervalued, et cetera, et cetera, et cetera. It was being manipulated by the big banks, such as JP Morgan, to be kept artificially low. And now we're finally getting the expansion. I know, we all know, right? But the question is, why do you want to buy it up here now, right? It's FOMO, just pure FOMO, the blow off tops, right? So as of right now, it is a blow off top. It's going to be very difficult to recover such drastic declines, right? Usually when you get hit with some form of a volume climax blow off top, sometimes you have to consolidate a bit more before moving higher. You're very extended from your moving averages. The RSIs were all very overbought. So maybe, just maybe, you now embark into a period of consolidation. But to be expecting these metals to have some of their record performance that they had this year into next year as well, I mean, I don't know. Maybe we see it, right? But just at a first glance, SLV this year is up 150%. I don't know. Maybe it doubles again into 2027, right? But to expect the same gains out of silver here that people got from positioning down here is a little bit unrealistic. What I'm saying is that the risk to reward trade-off right now is skewed negative, right? It doesn't mean that if you buy up here, you won't make any money. Quite possibly you will. It just means that is the risk to reward there to justify heavy positioning? No. Back here, you could justify heavy positioning with a very nice thesis. Up here, it's very difficult, guys, very difficult to justify super heavy positioning, even with all the fundamental catalysts, the export restrictions. I mean, the margin requirements were hit as well. I didn't touch upon that. So before somebody comments down below, well, you didn't talk about the CMA raising the margin requirements. Well, there you go. I just did. Okay. So we know all the catalysts, right? Just throw another one on top of the mix right here. I'm just here to say that maybe when you see charts that look like this, you have to ask yourself if the risk reward is still worth it, right? Does it matter if you don't participate in silver and gold? Does it really matter? Are you just never going to be able to make any money elsewhere in the markets? Probably not, right? However, if you're of the opinion that the entire asset market and the dollar are just all going to go down 50% next year, and that metals are your only safe haven for the near-term future because the big money cabal knows something about a mysterious 10-year global recession that people are talking about behind closed doors, and all this institutional money is pouring into these just to save their shirts and park client money and billionaire money for the near-term future or the long-term future. I mean, if that's your thesis, I mean, I respect it. I'm not saying if it's realistic, you can't have 100% probability on a thesis, right? It's a thesis. It's a tinfoil thesis, right? Contrary to popular beliefs. If that's your thesis, by all means, my brother, run with it. You know what I mean? It's up to you. It's not my money. But buying up here with that thesis, you may just be a little bit late, and just do so with good risk management practices. That's what I'm going to say on the metals. So is it a good time to buy? I mean, I'm not buying. If I would be buying, it would be very, very tiny nibbles, because I understand starting a full size YOLO full send position up here, maybe not the best risk to reward proposition. Just maybe. Who knows? Maybe I'm wrong. But usually when you see charts like that, volume climaxes, culmination of narratives, and culmination of retail interest like this, sometimes it tends to mark a local top, and sometimes you don't get that immediate recovery. But we'll keep an eye on this one as we move into the new year. And that's everything for your overall market rundown and a very long segment on the metals trade. Right? Copper, interesting, into next year for some of the data center requirements, right? Cable management requirements. And obviously we can talk about the counterplay to copper, which a lot of people on Twitter are bringing up, such as the photonics trade and optoelectronics trade, such as the names like Light, you know, and names like Applied Optoelectronics. If you guys don't know those ones, I mean, do your research into them, why some data center providers are pivoting away, or rather some chip manufacturers are pivoting away from the use of copper in semiconductors towards microfiber optics, et cetera, et cetera, et cetera. So this stuff goes really deep, man, really deep. Trust me. We know, right? The use of silver in solar panels for, you know, names like FSLR and names like T Energy and et cetera, et cetera. We know. Trust me, we know. We talk about it in the Discord all the time. And if you want to have these deep discussions with me, definitely take a look at our Discord down below in the link description. I usually very rarely reference this, but it's tough for me to talk about all this stuff in YouTube videos, right? If not, I would have to make dedicated YouTube videos on this stuff, which I guess could be an idea, but just not in the cards for right now. That being said, let's move to big tech and then we're going to get into the biggest gainers and losers, shall we? All right, so we won't spend too much time on this stuff because none of this stuff is moving in the past 2 weeks, right? So Apple, still the exact same pattern, right? It's a daily downtrend. You're looking for the bulls to slowly get this one back. We'll see what they can do. Support stays put right now, still at about the lows of 267. Still in a bit of a weekly consolidation phase for Apple. No lower lows, but we also know that let me just take the volume off of this because sometimes it's distracting. We also know that Apple may just be anticipating going for a monthly higher low. Whether they drop all the way down to the 12, which would put you at 256 to 248, would not be too bad. It would be a beautiful breakout retest trade and would be a trade that I would be interested in playing if we do get the opportunity. I'm not really playing Apple up here for the breakout, but I'm not also selling any of my long-term shares. I'm holding them, and the valuation up here just does not support any very fat new longs for me, right? I'll be waiting for a bit of an Apple nibble down here for my long-term shares and some swing trades, but up here on Apple, I'm not really doing anything. Valuation is extended, and the technicals as well are a little bit too extended for me. Moving on to AMD. AMD, nice power play into, well, not energy power, but a nice power player into 2026, in my opinion, because of the thesis. The thesis hasn't changed on AMD. I mean, they are now exporting some chips to China with NVIDIA, so that's definitely going to help. EPS, huge ramp into 2028. Revenue, huge ramp into 2028. We will get to hear from Dr. Lisa Su next week during the CES conference as well. AMD's been doing a whole lot of nothing the past few weeks. Short-term price action is kind of just all over the place, right? Low volume, not too much to derive from any of these short-term charts right now, but the long-term charts paint a very clear picture. AMD is trying to build a base of support right around that $200 level. There's still a bit of a gap to be filled here from the OpenAI news, which could extend us down into the 190 to 175 region if we do embark on that further consolidation process. But what you're doing right now is you're just setting some monthly higher lows. So AMD trades for me, very simple, guys. Shares into 2026, right? Not too bad. And any steep declines, I mean, selling some put options down here, 190 to 175, not too bad. Still very bullish on this one. Valuation is quite cheap down here at about under a 1 peg. Moving on to Amazon right now. Amazon also not doing too much, but is one of the top picks, both from retail investors and some of the banks into 2026. Short-term price action is kind of mixed though, right? Daily downtrend. You got the nice engulfing move. Now they're going to be looking to set up the new daily uptrend. They're trying to do all of that within the confines of resistance. 240 down to about 230. Big resistance range for Amazon. You can see they're just tightening up the price right here. If you want to see the weekly uptrend, we need a break and close above 240, which will be a couple things at the same time, right? It will be a new weekly uptrend. We will be breaking above the resistance range, and that might actually be what gives Amazon some legs after a few months of consolidation. Healthy monthly consolidation. So Amazon for me is a couple different things right now. Number one, leap call options, which we did a good job of hinting at on some of these consolidation lows, sub 220. Amazon, leap call options, deep 2027 expiries, I am a fan of, and I do have them myself, not financial advice, just telling you guys what I'm doing for Amazon, building some shares, because eventually Amazon could just be one of those names like Apple, like Google, where you get a period of time to accumulate and then it just runs, you know, kind of like Microsoft as well. You get a period of time to accumulate and then it just runs. So the entire time that Amazon is down here consolidating, well, I want to take advantage of it because eventually when it does choose to run, and it will run in my opinion, well, we won't be able to buy anything anymore, right? So just an accumulation range for Amazon right now. Fundamentals look really good into 2026. Beautiful revenues, beautiful guidance for last quarter's earnings, and also around 220. We're marginally higher than that right now, right? It's a sub 30 price to earnings at about a 1.4, 1.5 peg, quite manageable in my opinion. Moving on to Google. Google not doing too much. Daily downtrend. Nice move by the bulls. They're trying to get the daily uptrend back. We'll see if they can actually do it or if they just embark into further weekly consolidation. Keep in mind, though, your line in the sand level for both of those time frames is the daily higher lows 297, which is also your weekly higher lows. So if you lose those two things, it'll just be a continuation of the daily downtrend and unfortunately a new weekly downtrend, which just puts you down here into this area of consolidation, 290 down to 270. This, I mean, it's not big, but it's the closest one that we have. And you would just be looking at the end of the day for a bit of monthly consolidation for this chart that is super extended on the monthly RSI, super extended. They did a good job cooling off the weekly RSI a little bit, but still very extended. So essentially on Google, it's very tough to do anything up here, right? Google for me is a hold, a long-term hold. If we're looking for swing trade repositioning, you can make an argument that it's a nice idea to take some gains on Google and rotate those gains into some other big tech players that have been kept relatively low in the most recent 2 months. But Google is a hold, right? The valuation up here doesn't really support any net new buys for me. Definitely not any huge buys, right? And we would not be, we would not be surprised if Google does choose to consolidate a little bit into early 2026. It does happen to all the greatest names. Nothing can go up in a straight line all the time, but Google still very strong tailwinds for this brand into next year. Moving on to Meta right now. Meta just down about 0.69% today, not doing too much. Just a lack of overall clarity in the price action recently, right? The bulls trying to break out here, trying to reset the daily uptrend, but not really getting anything going. This is a fake candle, by the way. I can't wait until they remove this. It's not real. Price never traded up there. Overhead resistance, 680 up to 707, and downside support, 645 down to 627. So keep that in mind. If you're looking to play the wheel with a big account, your first entry would be here. Save some buying power for down there if they do send you for the second leg down on the monthly retracement. But Meta's looking good, right? Although the short-term price action is just kind of doing nothing because of the low volume environment right now, there's a few things that are interesting here on Meta into next year. Number one are just pure share buys for long-term portfolios. Valuation in around 630 is a low 20s multiple, a low PEG ratio, and a decent free cash flow yield overall. So Meta, probably one of my favorite big tech buys just for pure shares into 2026, but the short-term price action doesn't really give me any indication that it's a great proposition to be going for short-term call options or things like that. May have to wait a little bit until Meta gets some more favorable price action for us, possibly just breaking above resistance. Give me the breakout out of resistance and the back test for like a more full monthly move higher, and then we can maybe talk about going for the expansion leg. As of right now, the price action is just somewhat muted for any short-term swing trades, things of that nature, but long-term shares or leaps, if that's your thing, if you have a tremendous amount of buying power, not the worst proposition either. Moving on to Microsoft right now. Microsoft just doing a whole lot of nothing, guys. Overhead resistance, 500 down to about 490 is that 10-point range. Big support previously, a big resistance currently. Several of your longer-term moving averages are sitting right above us right now on the daily and weekly timeframes. I mean, the bulls are trying to go for something here, right? They're trying to go for the daily uptrend shift. They need to break through resistance to do that, though. And we're also trying to get the weekly back. Weekly would be a break above 494. Give me that break. Weekly uptrend is back. And you also have the monthly lows, which are set. Now, Microsoft's just been consolidating, doing a whole lot of nothing. But during this consolidation phase, you will notice they tapped into the 12 EMA. Usually buying Microsoft around the 12 EMA is a much better proposition than buying Microsoft all the way up here, which is why I've been waiting for so long to be able to buy Microsoft to accumulate some shares. So Microsoft is still the same trade for me. Any moves lower, I'm selling put options down below here, 470 to 450 pocket, which would be your 12 into 26 EMA and resistance into support trade. This little pocket selling some put options for the big accounts, but also for you guys looking to build positions in Microsoft, well, now in around 470 or close, under a 30 forward PE, 1.66 peg. Above here, we were at like a 2 peg. So now the valuation is much better on Microsoft. Interesting play into 2026. I think they'll do fantastic, although they have just been consolidating sideways with a downward bias in the second part of the year right here. Nothing wrong with the company, just very normal price action, extended time frame consolidation, huge rally, and then you consolidate and then maybe get ready for the next leg into 2026. On to Netflix right now. Netflix just doing a whole bunch of nothing as well. In my opinion, this one probably won't move until either Q1 earnings, which come into the third week of January, January 20th, or until we get some further clarity on the resolution for the Warner Brothers Discovery deal. As we know, they're in a bidding war with Paramount, and every piece of news that comes out either pushes Netflix up or down, so they'll be pushed and pulled in either direction as that deal remains on the table. Several key points for Netflix right here that could be interesting for you, though. 26 EMA, very rare that Netflix touches the 26 EMA. Usually when it does in the context of a bull market, and especially in the context of the business's fundamentals doing well, right? Improvements in net margins over the past years and quarters as well. Very nice net margins for Netflix right now. They have very good forecasts for next year as well. Beautiful EPS growth, beautiful revenue growth, and free cash flow growth as well. So the fundamentals are not the question. This most recent leg of selling from here, just been sentiment because of the deal, right? So maybe you guys want to pick up this sentiment deal on Netflix right now. Still down 30% from local highs into some support ranges right here and at a more manageable valuation right now under a 30 forward PE, a 1.5 peg as well, and phenomenal earnings and great guidance. So this is definitely one that I will be focusing on in 2026. On to NVIDIA right now. NVIDIA down about 1.21%. No news, but pay attention. You're going to get some news next week. CES, the big CES. with good old Jensen Huang and Lisa Su. So a lot of other semiconductor companies as well will be presenting some of their not material guidance for 2026, but just a lot of the things they're working on and how bullish they are surrounding the whole industry. So nice engulfing move by NVIDIA that we saw last week, right? So they've been kind of stuck down here for a while, overall downtrend. Now you got a nice engulfing move, right? So the good old breakout, you're looking for the retest of where? 185 down to about 178, previous resistance, support, challenged as resistance again. And now once again, trying for the breakout, retest, and maybe run into next week. We'll see if they have it in the cards, but NVIDIA looking pretty good right now. The weekly as well, shift back to the bulls in terms of weekly uptrend, and they're looking to set the monthly higher lows. We've been very vocal on the channel about playing NVIDIA down here to either accumulate some shares, play the wheel strategy, or if leaps are your thing with deep 2027 expiries. We were noticing that there was some decent risk to reward propositions down there. So maybe you guys are able to get a few of those off. And if you weren't, even up here at about 187, is it still a good proposition to be buying NVIDIA? Well, yeah, you can see here that around 175, the price to earnings was very low 23s, around a 1 peg. And at 188, that's not much different, right? That's not even 10% higher. So just add, that maybe creating a forward 24.5 PE right now, like a 1.1 peg. Still very cheap valuations for NVIDIA and looking quite good after consolidating for a very long time now. Might just be looking into 2026 for that next leg of expansion. Moving on to Tesla right now. Tesla down 3.27%, consolidating a lot. And you'll see this news headline right there. There is some nervousness surrounding the delivery contractions. And we will get Tesla deliveries, I believe, January the 1st or January the 2nd, as a matter of fact. And as a result, Tesla stock's been coming down after a beautiful rally here into new highs. Sadly, we're just pulling back right now. So daily higher lows are being sought after by the bulls. 442 is your daily higher low area. 442, 440 area. Looking for the daily higher lows. Maybe for further trend continuation. Looking at support right now. 460 down to about 443. The weekly, same concept. Engulfing move. Looking for some higher lows. We will see if the bulls can play some defense into those delivery numbers. And the monthly timeframes do show that the Tesla bulls are still in full control right now, just lacking that high close into the end of the year. But who knows? The month is not done. Maybe they make their way back up there. It would be surprising, but maybe still in the cards. I mean, obviously, short-term negatives still remain the car business overall, right? But the long-term positives remain for Tesla as well, although Tesla is somewhat behind on Elon Musk's ever so elusive timelines, behind on the FSD timeline stated earlier this year, behind on the robotics timelines stated earlier this year. Solar and energy business, though, is doing a lot of numbers. So we will see what Tesla has in store for us for guidance when they give their earnings end of January. I'm not playing Tesla up here. I'm still holding the shares, some of the shares that I had built up from a really long time ago. I'm not adding anything up here, nor do I have any call options or short-term swing trades either. But congratulations to all Tesla shareholders. You guys must be loving this end of year move. Moving on to Palantir right now. Palantir down about 2.4%. No news on Palantir, just awkward consolidation. Higher lows line in the sand, 177. Pay attention to it in the context of a nice daily uptrend breakout. Looking for maybe the bit of a back test and maybe a bit of continuation rally into 2026. Not looking too bad. The weekly, nice not engulfing move, but you had the weekly uptrend, you lost it. Nice 78, 80% retracement size right here. Even if we consolidate a bit more, guys, I don't think we're going to test these higher lows, 149. So you just be looking for a new higher low as Palantir kind of consolidates and gives itself some time to grow into these somewhat ridiculous valuations, right? Do they deserve them? Do they not? I'll leave that one up to you. We talk about that every time we cover their earnings, right? It's worth it if you believe in Palantir as a 5 to 10 year timeline, right? But justifying these valuations in the very near or short-term time horizon, difficult to do, right? But Palantir, I'm not making any plays on this one so far. If you do retest some of these lows though, 172, maybe you'll find me exploring some short puts if you get some volatility. But as of right now, just not doing any action on Palantir. Moving on to SOFI though. SOFI, I am doing some actionable trades on right now. So SOFI down about 1% today. No news, just normal price action. I mean, SOFI's just been doing a whole lot of nothing, right? The bears controlled the downtrend. The bulls had a nice engulfing move. They're kind of looking to get it back to kind of send us into the resistance range again, 28 up to 30. Down below, big support, 25 to 22. Just been a consolidation range, right? Just very awkward, wide price action. There's been some highs, there's been some lows, but overall you can clearly see, right? Just indecision accumulation rather, right? And monthly accumulation as well. So big support right there. Our previous resistance should be newfound support. And all we're doing right now on the longer term timeframes if you look at the daily, you might be getting chopped around. If you look at the weekly, arguably, you might be getting chopped around as well. If you look at the monthly, it's a very clear picture, right? Looking for the monthly higher lows after a 3-4x rally from the bottom, just cooling down some of those time frames right now. Nothing wrong with the business overall, which is why I am still selling some short put options down here. 25 down to 2022. Just collecting some premium, man. Writing some put options down here. If they want to assign me, perfect. That's where I want to buy SOFI shares anyways. If not, I just get to keep the premiums in my pocket. Is SOFI a good buy here at 27? It's not a bad buy. It's a 1.1 peg and a mid-7 price to sale, so keep that in mind. Here through this area, probably your best bet to load up on some SOFI shares if you're looking to carry these shares into the next 2-3 years of expansion of the business. On to our two last ones right now, Uber and TSM. So number one, Uber up about 0.3%, but Uber obviously over the holiday period has done nothing, right? Big volatility and then a whole bunch of absolutely nothing. So short-term bears are still obviously in control. You want to see the bulls reset the timeframes up here. If you just crack these lows, you might be heading a bit lower right there. But the daily in a low volume environment like this, I mean, just throw the volume on Uber, right? There's like no volume here. You know what I mean? So very tough to determine with this recent price action which way we break. But for that, if you are lacking clarity, just zoom out to the higher timeframes, right? It's still a weekly downtrend. Nobody's doubting that. It's still a period of monthly consolidation. So when you know that you don't control the short-term timeframes, well, it may not be the best proposition to go for some short-term call options. But what it can be a good time for is accumulation for longer duration positions based on these monthly and weekly timeframes. Big resistance, current support, nice fundamentals around 80, very low PE ratio into 2026, a 23, a 1.43 peg, and a 5.25% free cash flow yield. All very good numbers to be building some positions in Uber if Uber is the type of company that you want to own and that you do believe that their revenues from their bookings and their trips and their mobility and deliveries will be moving higher and that they won't be disrupted by the autonomous vehicle market in the snap of a finger, right? They will largely be, moving with the autonomous vehicle landscape as they have a whole bunch of partnerships with a lot of very big players all across the globe for their own autonomous vehicle purposes into the next few years. And now lastly into TSM. So TSM sadly just not able to climb above our all-time high resistance. It's been rejected here a number of times over the most recent few months, let's call it since October. Nothing wrong with the business though. Rejections here, 310 out of 301. Let's call it 310 out of 300, right? Is your resistance range for the all-time highs. I mean, short-term price action, very unclear right now. They had the daily loss of the uptrend by undercutting these lows. The bulls are trying to put in a bounce to get it back. It'll be a two-step recovery process, in my opinion. That being said, weekly, it's just a very awkward range of consolidation. Reminds me a bit of up here. Sideways range of consolidation, just cooling down your weekly timeframes and also cooling down the monthly timeframes. Small, incrementally, right? No test of the 12 EMA, which you guys know is my favorite backtest location, but who knows if they stay planted here into even early January prior to their earnings, which should be the week of January 15th, not too long, right? They stay planted for a little bit more and give us another backtest down here. It could be interesting. I mean, TSM came out and said that they're going to be raising prices every year for the next 4 years because they can. And the demand is through the roof right now. Very high margin business, around 275. Not the worst proposition at those support lows. Low 22 forward price to earnings, a low peg ratio as well. So TSM is not a full send buy for me up here. It's a nibble and or a hold. I'm not doing any leaps on it. I'm not doing any short-term call options for some explosive moves. No, that would be if we came down here for a full monthly 12 retracement, right? However, TSM, a very interesting hold into next year overall. No problems with the business whatsoever. And that wraps up our overall market preview, the themes, some things to watch out for, talking about the metals, talking about our big tech names. So hopefully you guys enjoyed all that segment of the video. Now, let's jump into our biggest gainers and losers of the day, shall we? Okay, so as part of our biggest losers, guys, well, once again, we have several key names from the AI trade. Names like EOSC, the battery player, right? Names like Oklo, names like, MP Materials. A lot of the fan favorite narratives from, let's say, September and October are being wound down progressively one after the other. Now, each of these is meaningfully different in their own respects, but we'll talk about a few of them as we always do, right? So the NBIS, Iris Energy trades, these are still accumulation trades, in my opinion, whether it's NBIS or Iris Energy or CIFR or APLD or Wolf or whatever your favorite data center builder trade is out there, or even something like an Oracle, right? In my opinion, guys, as I've said many times on the channel so far over the last month that we've been noticing these declines, it's just this period of time, right? You had the timeline looks like this, and I'll just keep drawing this until people finally get a sense of what's happening right here. This was the big build out phase where you had a lot of deals, right? Every other week, especially in the later part of the summer, you had Microsoft or Amazon or all these big companies throwing tons of money at new data centers, new data center partnerships, et cetera, and it led to all these moves like we saw right there. OpenAI throwing around a bunch of money, right? And now we're in a period of time where we are between the actual period of time where you get a lot of the execution from all of these companies, right? So the money was thrown around. Now they got to build the stuff. And this is what I call the dead zone, right? Where you got a bunch of narratives, a bunch of people focusing on the debt of these companies, the continuous share dilution of the companies. Does Oracle's remaining performance obligations, do they even make sense, et cetera, et cetera, et cetera. The noise period, which is otherwise known as the accumulation period for institutions or retail investors that know how these cycles work, right? And then deep 2026 is where you actually get a lot of the build out from these data centers actually happening, where you actually start generating some revenues from a lot of this stuff. But just keeping in mind this cycle right here, you can kind of lump up a lot of these names into the same thing, right? Names like quantum computing. Quantum computing is a very beautiful premise in theory, right? But in all reality, a lot of these names, and I mean, people have been talking about this. I've been talking about this all year so far. These names ran super hot, but where are their revenues? Their revenues are nowhere for the next few years, right? Rigetti or something like QBTS or other names like that, names like SMR, Oklo, right? A lot of these small modular nuclear reactor plays, which are great technology theoretically, right? But where's the build out period? Well, the build out period happens very late, 2027, 2028. And as a result, you had the initial hype cycle, the momentum cycle, and now you've lost all the momentum. Why? Well, because the companies have nothing further to report for what they're working on, right? And so many other things, such as the critical minerals plays as well, MP materials, quadruple U's, USAR, all these plays are the exact same. I'm not saying that none of these plays are good. I'm just talking about you have to understand where you are. You get the initial hype cycle on a lot of these things, right? Everybody gets involved, kind of like silver right now. Everybody gets involved. However, contrary to some of the metals, right? A lot of these companies specifically, they don't have much to show for this price appreciation much before the next few years. I mean, if we just look at MP Materials, I mean, I know they got the investment from the Trump administration, and I know that critical minerals will be highly produced now on American soil, right, by American manufacturers, as opposed to buying from the Chinese, which is the whole purpose of this trade. But when are the revenues coming? Like, when is the big expansion phase? And you can clearly see from all these names, they're all the same. Even though they're in many different industries, they're all the same. You have the initial hype cycle. Now, where are the revenues? 2027, 2028. And even then, it puts this one super expensive on a forward price to sales basis. So I'm not saying that none of these names are good, right? However, when you have a lack of news headlines, right? Well, then you end up with some names, with some of the situations like I forget which name I actually drew it on, right? This whole, this, that, and this. Well, now we're in this execution period of time for a lot of these different narratives, for a lot of these different companies, whether it's quantum, whether it's some of the nuclear speculative plays, whether it's some of the data center builders that, you know, now it's going to be a question of focusing on their debt and share dilution until they get the actual data centers up and running, or until you hear about more headlines of Microsoft and other companies throwing $10 more billion at these companies, right? You need something. But we haven't had anything on these companies for a better part of the last 2 months. Now, I do agree that a lot of these data center builders have a very nice forward earnings projection for deep 2026. But notice what I say. It is indeed deep 2026. Until that happens and until these projected remaining performance obligations turn into hard annualized revenue numbers, well, it's very tough to kind of predict when they're going to turn around this narrative. As of right now, it's just consolidation, a lack of momentum, and now all you'll be left with is a bunch of retail traders exiting these trades because they think they're done for, but you'll have a lot of smart traders on the other side of that looking to pick up these dips and accumulate, right? Just as the people all the way back here spent time accumulating these trades before getting what they were looking for. Now they're seeing a lot of profits, right? So if you are interested in some of these narratives or whatnot, we are once again back into accumulation phases, right? And sometimes in some of these accumulation phases, you have to sit for a very long time before your thesis plays out again, before the next phase of the thesis plays out again. And if you guys were sitting in Palantir with me through 2022, we had to wait like a year and a half for Palantir to actually do something. Right? If you were in Tesla with me prior to the whole EV expansion boom post-pandemic, you had to sit in Tesla for a year and a half before it actually did something, right? And even thereafter, you might have had to sit in Tesla again for about another year and a half before it did the second leg of something, right? And even some of you guys that were in Robinhood as well, you know, all the way back here, you guys know the feeling, right? You'd sit in Robinhood for a while before it actually did something, right? So now, right, they had their initial rallies. Now you might have to wait for a lot of these companies to do something again in terms of actual revenue projections, in terms of actually building out these facilities that they've committed to kind of building to, right? That being said, there are some still great opportunities that I'm building in. Some of the small cap names that I'm interested in that I've built positions in recently are names like TE Energy, names like UiPath into 2026, names like FLNC, which I think is a better battery storage play than EOSC, but that's just me. You know, names into the future like Bloom Energy or other, you know, other energy proxy plays, as we like to call them, or other utilities plays like Vistra, which has been consolidating now for the past 4 or 5 months. So just understand where you are in terms of the hype cycle or the media news cycle. That's not so much focused on these names anymore. A lot of people have left these trades for dead, but they're not dead at all. They're just consolidating and in accumulation phases. But you'll notice as well, some other names on this list. I mean, there's not too much action down here, so we're not going to talk about it. I'd rather talk about the narratives at play right now, okay? And have you guys focus on the narratives and the timelines. It's more important than me just commenting like, oh, like NVO is still down here. You know what I mean? Like everybody knows NVO is a great undervalued fundamental play. I don't need to talk about it every single day that it's on the red list right here. You guys know, but you also know that it's going to be a long road to recovery, such as many other companies, such as UNH, such as Nike, right? So many of these companies, like we know they're good plays, but it's just they have very long roads of recovery ahead of them before getting that momentum back, right? So that being said, other plays that I want you guys to pay attention to are plays that haven't been very sexy, but they have been plays that have been outperforming recently. The plays like the SPGIs, right? Not a very sexy play at all, but look at the month of December. Look at your monthly closes for December. Obviously, when you look at monthly closes like NBIS or Iris Energy, that doesn't show very good momentum at all. It shows that the bottoming process has started, but may not be concluded just yet. Not until you regain some of that short-term momentum, some of these shorter-term timeframes like the weeklies. The other names, though, are going for it now. SPGI built a nice base for a couple of months. Going for it, they're going to close the month at the highs. Names like Visa closing the month at the highs. Names like MasterCard closing the month at the highs, right? Names like Booking.com, right? After a 4 or 5 month decline, closing their candles at the highs, right? Some of the banks as well, like JP Morgan and whatnot, financials closing some of their months near the highs. So pay attention to where the money is rotating into, right? A lot of the consumer discretionary names as well, right? Some of them, just some of them have been recovering a little bit, right? You're seeing some further pushes into names like CLH, Abercrombie & Fitch had a great month, although they're coming into resistance. I'm not going to buy Abercrombie & Fitch. If I'm going to play something, I play it, especially in fashion, I play something for a business model like TJX, you know, or I'll play Louis Vuitton for the business model, pay special attention to Louis Vuitton as well. They might be able to have a nice 2026 after being down, monthly downtrend for like 3 years. We're doing a couple things right now. Engulfing move, right? Up the downtrend line right here, the upper portion of the downtrending channel, that trend line right now being back tested, huge support below, monthly moving averages below, might be building a base. Well, there's several nice ideas for consumer discretionary. You don't have to play individual names and take your chances on things like Chipotle, which have just very bad guidance, in my opinion. Like you don't have to just, what I don't want you guys to do is just look at a chart and say, oh, this one is down the most. Let me play this one. No, you can afford to play things that are midway through a recovery cycle when they don't have bad earnings whatsoever, right? Or they're already into the recovery cycle with better earnings than previously, such as Louis Vuitton, right? So you don't need to only play the things that are down the most. You can pay special attention to some names like Airbnb as well. Beautiful monthly close. This is the strongest monthly close that Airbnb has had, arguably in the last, 2 years? Finally closing above the highs right here, right? Monthly downtrend, and now looking for a big monthly move. So there might be some room to the upside still in some of these names if you just pay attention and know what you're kind of looking for, right? Berkshire's done nothing all year. Now, this play is not very sexy for a lot of you guys out there, but it could be very interesting after consolidating for a year with decent fundamentals, right? Maybe a nice upwards play into 2026 overall. And there's several other niches of the market that are like that, and several other names which they didn't really have a hype cycle. They just have very strong earnings, but somewhat high valuations right now. Names like ANET. Pay attention if you're looking for some names, right, as part of the AI trade that are down. I mean, look no further than some of the names that are testing their 12 EMAs, right, or close to their 12 EMAs after monthly consolidation periods of time with great earnings and great forward projections. Names like ANET, right? Pay attention to names like A-Lab as well. A-Lab could be interesting. A lot of institutions commenting on this one into 2026. It's a bit of a riskier play, but a play that arguably does hold its weight there in the names that institutions are looking at overall. Could be interesting, like names that we've talked about a lot, like NVIDIA after monthly consolidation, AMD after monthly consolidation. Sure, it's not close to the 12, but we've come down significantly. This is the time where you want to be paying attention to a lot of these names, to accumulate some of these names, because they don't have that much debt, right? Debt's not a problem for these companies. They have good margins, expanding business models. So you don't have to play the things that are down the most. You can choose to play things that are down or currently expanding, right? As some of the themes into 2026. Hopefully I'm making sense with a lot of this stuff, because there's many ideas across the board, from names like semiconductor plays to networking plays like ANET, things of that nature, names like utilities plays, energy plays, names like some of the financial data companies like MSCI. Look at MSCI. It's just been coiling here for literally what, the past year? Doing nothing in a support. It's been doing nothing and nothing and nothing and nothing. This one, I mean, it's been doing nothing other than improving its fundamentals this entire time. And you guys know when something improves fundamentals and stays sideways, it might just be looking. I mean, the bias is definitely up and long, right? Other names like Mercado Libre have been progressively improving their earnings outlooks all year. All year, they've been improving their earnings outlooks. Their EPS and revenue growth for the next few years is massive. Look at this EPS expansion, revenue expansion. They've been coming down for a few specific sentiment reasons around, the elections in Argentina, et cetera, et cetera, et cetera. And then, a couple other things here and there, just brought down with the overall tech trade too. But at the end of the day, man, like this is just monthly consolidation into a 12 EMA with expanding fundamentals and a very cheap multiple. So, some of these names are quite interesting. There's a lot of very nice opportunities into 2026. But as I said, if you know where to look, right? I'm not saying to what you don't want to do is fully concentrate into, it's fine to have some of these speculative bets, the high beta names, but that shouldn't be your entire portfolio, perhaps. You should be looking to kind of broaden outside of these, understanding that, sure, these could recover like NBIS and Iris Energy. They could recover tomorrow and go on ridiculous rallies, right? But what if they don't? What if they take the next few months to further consolidate as we wait for their earnings to come in, as we wait for more CapEx guidance from big tech, more deals potentially from big tech, wait for more momentum in these names, right? You should be looking for other opportunities. While accumulating some of these trades, yes, there are many, 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 many other segments of the market that are ripe for the picking right now. And that's what I want to talk about in today's biggest gainers and losers of the day segment. I think it's far more important than just running through the list of names on this list right here and saying, yeah, this is a daily downtrend, this is a higher low, this is support, right? Just pay attention to the themes moving forward. So I know I jumped around all over the place right there, but hopefully the arguments that I was making make sense to you guys, and hopefully it sheds a bit of light on how I'm thinking into 2026. But that's it for today's video, man. Thank you guys so much for watching. If you did enjoy today's video, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing if you're new. We do these videos every Monday to Friday after the close. And last but not least, if you have any questions, please feel free to always leave them down below in the comment section, and I'll get to them as soon as possible. Last but not least, if you are tired of trading and investing in the markets all by yourself, you may consider doing so as part of our trading and investing community with over 350 members, such as yourself, trading the markets every day and investing in some key names for our long-term portfolios. Keep in mind, we have a coupon code for the end of the year. It is capital letters XMIS 25. So Xmas25 is the promo code. I'll leave it down below in the video description, which is where you can find the link to join our Discord group. And in that Discord group, you get access to a few different things. Number one, you get access to every single one of my trades I ever make, whether it's the wheel trades, you know, some of the directional trades, whether they're call debit spreads or leap trades overall, or just trades with shares. Everything that I do either for, long-term portfolio purposes or shorter-term trades in the trading accounts, you guys get access to all those when I make them in real time. You also get access to our private morning live streams every Monday through Friday for about 2.5 hours. I trade the markets live at the open, and then I take all your questions on your stocks, your options, your long-term portfolios. That is the best place to ask me the detailed questions that some of you guys ask me in the comment section, because in those live streams, I can answer you with the charts, the technical analysis, the fundamental analysis, and just the overall thesis behind constructing a trade overall. And if you're not there, the live streams are always recorded. You can also ask me your questions all throughout the day in our chat rooms. I'm very fast to answer. You get access to our educational section, which is where I have all of my educational content, guys, on how to build a trading account, how to build a long-term portfolio account, all of my trading strategies for leaps or further advanced wheel strategies, or all of my strategies and all the educational content, technical analysis, fundamental analysis. It's all in there. 15 hours of content, and I will never put that on YouTube. And last but not least, you do get access to all of my charts. So whenever you guys see fundamental breakdowns or you see support resistance levels on charts like this, on hundreds of charts overall, you guys get to copy paste all of my charts, all of my watch lists that I use to trade the markets on any day. And those are some of the main benefits of our Discord group. So if you're interested in joining us, as I said, the link is down below in the video description. You can use code XMAS capital letters 25 for 30% off of your first month if you wanted to try it out and see if the service is a good fit for you. We would definitely love to have you in there, and hopefully I do see you in there soon. And if not, I'll see you right back here on the channel. That's it for me. Have a great rest of your evening. I'll see you guys tomorrow after the close. Take care and peace.